Sabi ko nun, ready for you 2020. What a lie. May pa-claiming it pang nalalaman. Wala namang ka-claim-claim sa taong to.
Papunta kaming Tagaytay. We're gonna visit Tagaytay.
Tindi ng pasabog nung January. Buti sana kung fireworks lang. Kaso, dumating ang unprecedented times. Lahat ng pwedeng mangyari, nangyari. Siya nga pala, Lola Nora ko. Siya lang ata ready.
Basta pang 2 years na to, ha?
Anyway, yun na nga. Nakulong sa bahay, nakaubusan ng bilihin. Pag lumabas, nakakapraning. Iniwalayan nung gusto mo makasama sana habang buhay. 7 years yun, Zoe!
Mabuhay ang bagong laya!
Naghanap ng kaadikan para di mabaliw. Wala halaman.
2999! 3,000! Oh, Miguel! Catch up with me! Di ba 25 ka lang?
At mga balik-alindog na program.
Happy birthday to me!
Nag-birthday mag-isa. Kakalungkot din pala.
Happy birthday, Miguel!
Kung ano-ano sinubukan.
Ay, masyado matangos. Oh, better.
Kung ano-ano pa mga napagtripan. Kung ano-ano ang binili dyan. Di makapagpagupit, tinry na hindi mag-ahit, bumagyo, bumaha, ang daming nangyari.
Wow! Diba? Oh, galing ano?
Pero magbago na ang lahat. Huwag lang si Lola Nora. Last year sucked, but she was there to keep my spirits up. For that, thankful ako.
Hi, La.
Ano, Miguel? Ready ka na for 2021?
Start, may we invite everyone to answer our poll questions flashed on your screens right now. who answered. For those who haven't answered yet or sent their votes, please don't close the form and submit your answers now. Thank you.
Well, hello everyone. Welcome. It's good to see all of you over here. My name is James Deakin, and let me all welcome you to the afternoon's financial wellness webinar. Now, today's session is part of the wellness webinar series that's brought to you by the leading global life insurance company, Manulife. Today, we'll be talking about how you can prepare for a better financial future by putting your money to work or simply investing. Now, investing is an important step to achieving your best possible financial future because it offers additional income and opportunities to grow your wealth. And there are different types of investments here as well. One is investment-linked insurance that takes us a step further as it combines two opportunities in one: the possibility of higher returns in the future while still providing life security and protection for you and your loved ones. Now, I'm sure you'll want to hear more and more about this, which is why we've invited two subject matter experts. Our first guest will be talking about market outlook for 2021, while our second guest will help us understand what investment-linked life insurance is all about. Throughout this program, if you have any comments or questions for our speakers, just go ahead and send them via the Q&A box at the bottom right side of your screens. And later on, our guests will also be participating in the Q&A session. This is going to be great because aside from learning a lot, Manulife Philippines will also be giving away 5,000 pesos worth of Sodexo GCs. So stay tuned for that. Okay, it's time to get to meet our first speaker. He is the head of wealth sales of Manulife Asset Management Trust Company. He has more than 20 years of experience in retail banking and wealth management. He's also a chartered wealth manager, a registered financial planner, an SEC certified fixed income salesman, and an SEC certified investment solicitor. To give us an update on the latest market outlook for 2021, let us all welcome Mr. Zedric Matubis. Good afternoon, Zed. Hi. Welcome. How are you?
Great, James. Happy to be here.
That's awesome stuff. So are we. We got so many people tuned in, Zed. We got over 1,000 people right now. And you know what? They're a very engaged bunch. So I'll get straight to it. We're close to ending the first quarter of 2021. How is the market doing today? And what opportunities are we seeing?
James, year to date, as of March 5, yields are slightly higher by an average of around 80 basis points, while the PSEI is slightly down around 3%. Having said that, we believe that the outlook for 2021 is fairly positive, and we do see this temporary dip in the market as a good opportunity for long-term investors, particularly those looking at Philippine stocks.
Well, that's great. How are we advising clients with the new investable assets in today's market situation?
As always, we advise clients to do two things. One is to invest long-term, and two, to diversify. The prospects for 2021 indeed look positive, as I will discuss later, but there are still risks out there. People who have a long-term investment horizon and who have diversified portfolios will usually have a better investing experience no matter what happens.
Well, that's precisely why we're here today. Thank you, Zed. I'm sure everyone is excited, as I am, to hear about all your updates on the market outlook for 2021. So let's get to it, shall we?
Great. Good afternoon, everyone. So I'd like to start off with a quick look at various macro economic updates, and I'd like to start off with interest rates. So on the next slide, you can see here the yield curve, and we can see that interest rates have really dropped from a year ago. The white curve representing the rates from last year, and the green one just last February. But one can also note that the more recent trend is upwards, with December 2020 being the blue one and September 2020 the pink one. So we do believe that while yields are still low compared to last year, mainly due to the cuts to the policy rate of the BSP in 2020, there is indeed pressure for yields to go up, given potential higher issuance of government debt this year and also higher U.S. Treasury yields in recent weeks. On the next slide, we talk about inflation. Last January, you can see here that there was an uptick to the tune of 4.2%, forcing the BSP to revise their full year forecast to 4% from 3.2% originally. The BSP, however, expressed their belief that this was transitory and was merely due to supply-side disruptions relating to the recent typhoons and the African swine fever infestation. Not shown in the chart is the February inflation number because it was just recently announced a few days ago, which is around 4.7%, which is still within what BSP expected for the month. Inflation continues to be something that we are looking at, considering price stability can impact the ability of the BSP to keep rates low. On a good note, on the next slide, you can see here the GDP forecasts for 2021, and they are indeed encouraging. 5.9% from the World Bank, 6.5% from the ADB, and 6.5% from the IMF. This coming from 4 straight quarters of contraction in 2020. These institutions cite the following as drivers to the recovery. Number 1, renewed infra spending. Number 2, gradual recovery of the private sector. And number 3, the support of the central bank in terms of having an accommodative monetary policy. On the next slide, we see here something of a risk, and we're watching out for. This is the level of government borrowing for this year. So for 2020, it's very obvious that we had actual borrowing was higher than both the 2020 plan and the actual borrowing the previous year. Obviously, as the government fiscal spending increased to support the country during COVID-19. For 2021, we believe potential higher issuance of government bonds may bring headwinds to the bond market. On the stock market, on the next slide, we can see here how volatile it was, and you just have to look at the chart and you can immediately grasp the volatility. And if you can see also there, the volatility also was always in line with what is happening with COVID. So for the first quarter, because of the start of local transmission, you can see here the big drop. In second quarter, because of the lifting of EZQ and NCR, you also see the big jump. And in the fourth quarter, as optimism over successful phase 3 vaccine trials, influence the market to come back, encourage investors to come back, and you can see the big appreciation in prices there. To further show how volatile it was, on the next slide, you can see a table here of how wild it was, the greens and reds alternating against each other for every quarter. And just to drive how volatile it was, at one point during the year, an investor could have lost 47%, almost half his money, while at other points, another could have gained 78%. So that was how volatile it was. For the fourth quarter, in the next slide, you can see that one of the drivers for the gain in the stock market was the drop in daily new COVID cases and positivity rates from the highs of August and September. So we were experiencing around 1,000, just 1,000 or close to 2,000 cases, daily new cases late in the year. So that encouraged investors to come back. And on the next slide, you can also see here that the reduced number of infection cases also encourage mobility to improve. So we can see here, although we have not gone back to normal, you can see here, for example, from the low of negative 73% for workplace activity versus the pre-COVID baseline, we are now just around negative 10%. And you can see the drops in almost all other categories like going to the malls, using public transport, etc., etc. In the last 4 days, however, daily cases have increased to around 3,000. And this is something that we are closely watching, obviously, and this will definitely have an impact on markets. On the next slide, you can see here what the government has been doing in terms of reforms and increased spending to support employment growth, and the impact that will have on our forecasts on unemployment and also infrastructure spending. And you can see here that the trends are going to at least approximate pre-COVID numbers in 2021 and in 2022. On the next slide, specifically, you can see here what the government has done to make that happen. And that would be the national budget, for example, has a 10% increase compared to 2020. Compared to the 2020 budget, you have the second Bayanihan to spending law extension that will carry over 147 billion of unused funds to this year. You have the Create bill that will help corporations. It will also cut corporate taxes and will help attract foreign investments and generate employment. And finally, the FIST bill that will provide fiscal incentives to banks who will sell their non-performing loans and foreclosed assets to special purpose vehicles. In terms of corporate earnings, we see here that the positive, the outlook on the positive business environment, and because of excitement over possible vaccine rollouts, we can see here that forecasts for corporate earnings growth are double-digit across all the members of the main index, with the main index itself expected to have an average EPS growth of 54%. And with sectors like the financial sector and the consumer discretionary sector and in the industrial sector as well leading the pack. So to summarize, 2021 is poised to be a recovery, but there are still risks. So on the next slides, we'll show you these things. Interest rates are expected to be, somewhat low, and inflation manageable, at least for the first half of the year. The expectations of a vaccine rollout provide some optimism for mobility to trend higher and for economic activity to, show signs of going back to normal, which can result then to higher GDP growth and corporate earnings. But as mentioned earlier, there are still risks out there despite of this positive outlook, like higher than expected government borrowing, risks pertaining to COVID, like increased cases, etc., etc. So that's why we still encourage people to look at this market with a positive but have a long-term investment horizon. That is my last slide, James, and I am looking forward to answer questions later.
Well, thank you very much for that, Zed, for all of those updates. Certainly a lot to absorb, a lot to learn indeed. These insights will help us become more knowledgeable and confident about investing. I could see all those erratic figures you were showing. Wow, so much, as they say, to unpack here. Now, if you have any questions for Zed, please just type them in the Q&A box at the bottom of your screen, and he will answer them later on during our Q&A session. Before we move on to our second speaker, let's check out the audience's pulse on our poll questions earlier. And to update us on those results, well, we have one of Manulife's associate area heads, Vanessa de los Reyes, joining us today. Hi there, Vanessa.
Hello, James, and good afternoon to everyone. I'm here today to give the results of our quick online poll survey. Now, it's nice to see that our audience today is very interested in the topic. Now, our first question was, why are you investing? Why are you saving up or investing? And the choices are retirement, child's education, wealth diversification and growth, health emergencies. And 46% has answered that they are saving up for retirement. Now, Manulife has insurance plans that can actually act as your retirement fund. These plans guarantee lifetime insurance protection for you and your family while securing your hard-earned money. Now let's look at the second question. Where are you currently invested? And the choices are stocks, real estate, insurance, UITF or mutual funds, bank time deposits, or none so far. Now I see a lot of our viewers today are currently invested in insurance with 56%. Now, lastly, our third question is, do you know how investment-linked life insurance works? Yes or no? And 75% said that they know. They know how investment-linked life insurance works. Now, before I turn this over to James, we will flash another poll question. And the question is, what is your investment appetite this 2021? And the choices are confident or not too confident. I need advice from an expert. Now, I hope everyone answered, because later we will reveal the results and we will also pick one lucky audience member who will win 5,000 worth of Sodexo GCs. Now, once again, I encourage everyone to join our conversation by typing in your thoughts in the Q&A box. Later, our guests will address all of these in the Q&A session. Now, back to you, James.
Thank you, Vanessa. And like I said earlier, we have a very engaged bunch. Not only are they engaged, but it turns out they're very well informed too. Very impressive with the amount of people that not only reacted to the poll, but the answers as well. So people are really grasping it. You know what? I'm very impressed, because I thought a lot of people thought the best investment was, or what they were saving up for was like the Shopee sales or the Lazada sales. But no, it's good that they're saving for their future. I like that. And also the poll results, very, very interesting there. Moving on, we'd like to talk about some investment-linked life insurance policies now, or variable universal life plans. And for that, I'd like to introduce to you our next speaker, who will share with us how this type of plan can help you enjoy potential higher investment returns, liquidity, and life protection. He is one of the country's most knowledgeable and experienced financial experts. He's a stock market trader, entrepreneur, international keynote speaker, and he is also the CEO of Stock Smarts Inc. and a national bookstore best-selling author of 5 stock market and investing books. Ladies and gentlemen, join me in welcoming Mr. Marvin Germo.
Thank you so much. Thank you so much, James, for that very, very warm introduction. And while I was listening to what Sed was talking about a while ago, it was so amazing because my style when it comes to investing is to really look at where the economy is headed. Because as you start to drill down and know where the economy is, it will also allow you to analyze on how you're supposed to go about your investments. And before I begin, I'd also like to honor Manulife for creating this event. It's such an honor to see companies create events like this because I really believe that financial education, financial information is something that should be front and center right now. It's okay to entertain yourself. It's okay to be updated with news that's going around in the country, but people need to realize your future is not about waiting for the economy to get better. Sometimes your future is about you being faithful with what you have right now and be better and invest so that you can determine your future. Don't wait for it to just fall on your lap, but you take control of it. And that being said, people know me as a stock market guy. And what's so interesting about what Zed talked about earlier is it's really true. We are in the midst of a recession. And as what I always say, recessions are cyclical. It's not a question whether a recession will happen, but it's a question of when. And a greater and bigger question is what you are doing in the midst of it. Because I really believe that in the midst of uncertainty, there's so much opportunity out there. And what's not talked about is this. People always say that that recessions are cyclical, but here's the thing. Recoveries are too. It's not a question whether a recovery will happen. It's only a question of when. And a greater question from one investor to another is what we are doing right now in the midst of us trying to recover. Because sayang the opportunity is when everything is not so fruity yet, when everything is not so good yet, because when everything is so good already, sometimes valuations will be higher. Sometimes you don't get to invest at a price that you want to invest in, especially if you are investing for the long term. And unbeknownst to many, if you could show the next slide, please. People always look at me as a guy that's all in the stock market, but I'm a person who loves investing by distributing items and creating multiple streams of income. Because I know most of you here are so in tune with investing, but we have to realize that the name of the game is about distributing assets that will work hard for you. And if you are employed, it's also amazing that you get to focus on your job. It's so amazing that while you're focusing on your craft, while you're focusing on what you want to do, you have other assets that are working hard on the sidelines. And in the next slide, I want to share different pieces of how I distribute my investments and how I would somehow classify it. And a quick narrative on how I would distribute it is by 3. Number 1, growth, cash flow, and investments that would allow me to hedge. What do I mean about that? My intention for investments that would allow me to grow is basically this. As you all know, and I'm sure looking at the survey, a lot of you are already investing in different types of asset classes. You would know that investments that would allow you and would give you growth are items that somehow would give you volatility. Somehow that at some point, it will not be investments that would go up in a day or 2 or 3 or 4, but those growth investments are there to give you long-term capital appreciation. And my technique for that is to find investments that if I plant and invest in them right now, 5, 10, 15 years along the line, it will definitely beat bonds. It will definitely beat time deposits, and it will be a stable asset class in conjunction to my business or in conjunction to those of you who are also working. Second is cash flow. My cash flow investments for me are investments that will give me predictability of income. Cash flow investments for me are investments that, it may not grow as fast as those growth investments, but it will give me predictability. It will give me income on a monthly, quarterly, or at least a biannual basis. And the way you would segment it is this. When you are younger, and please do note that the way you structure your investments and your technique should be, the younger you are, the more you should be focused on items that will give you growth. And just to assume, no, I think majority of the people that are here are in their 30s, in their 40s, some are in your 20s, meaning you have a longer time horizon. The longer time horizon, the more you get to have the ability to double down and to invest. But you have to realize also that there will come a point in time that you will get older. As you get older, you need to also position on investments that will give you predictability. And all of us figured that out last year, that as markets dropped, some of those growth investments, as what said showed us, there were volatility in it. But investments that gave you cash flow, no matter how bad the market was, would have given you also cash in return. And lastly, the third one, and this is not what a lot of people would like to talk about, it's very, very important that you need to have as part of your portfolio a segment that would allow you to hedge. Hedge in a way that it may not perform as good as your growth investments. It may not be sexy, but it's there for the very purpose that if things don't go the way you want it to go, if the economy turns bad, or if suddenly something happens to you that your ability to earn more won't be there, you have that stable asset class that could protect you as well. And that's what I want to submit to all of you. You need all three. You need something that will grow, you need something that will give you predictable income, and you need something that will give you cash flow. And what's so interesting about that, in the next slide, and this is what not a lot of people know, was this. When I started investing, I've been investing for over 14 years now. And as I started investing in my early 20s, people thought I directly went into the stock market. But one of my first investments was I got into a variable unit linked insurance. I got into I got into a balanced fund, because with the very notion that hindi ko to inaral eh. This was something that I never grew up with. And I know for most of us as Filipinos, it's not part of our culture to talk about investing. And at that time, I was employed, and at that time, I was creating businesses that sabi ko, I need to have exposure to investments. But in the same way, while I'm not an expert yet, while I don't know as much, I need something already that will allow me to get my feet wet. And what's interesting about that, in the next slide, as I started to do a deep dive on what VULs are, I realized that VULs, as you can see the next slide, are composed of two particular things: stocks and bonds. And as I started to analyze it, majority of people would see that if you invest in stocks, it's a bit volatile, it's a bit scary, it's a bit risky, it's something that you may lose your money in it. But as I started to dig deeper, and I hope that this adds value to you right now, while we're in the midst of a lot of uncertainty and still volatility, that you have to look at it from the lens that every time you invest in a fund, in an equity fund, in a balanced fund that has exposure to the stock market, what it gives you is a piece of ownership in the largest companies in the Philippines. It could be Ayala, it could be SM, it could be the largest supermarket, it could be the largest telecom company. And the thing about that is this: when people say it's risky, I want to segment this to all of you, that if you start your own business or makipag-partner ka sa friend mo, start tayo sarili nating milk tea, or let's start this shawarma, or let's go into this franchise. I want to submit the idea that that might be even riskier than you investing in companies that are built to last. And please remember this. I like what Zedric said about the chart, that the Philippine Stock Exchange dropped not because the companies inside the equity funds were bad, but because there was a pandemic that nobody predicted. No one at the end of 2019 knew that by March or April 2020, 90% of the Philippine economy would be shut down. So please do note this. Prices dropped not because the company it was mismanaged, that they were doing bad. It just dropped because there was a lot of uncertainty. And if there's one thing we all know about investing, is uncertainty would cause people to stay in the sidelines. But what I want to submit to all of you is, I saw it from your results eh. Most of you are in it for retirement eh. And if you're in it for retirement and you are 20, 30, 40 years old, and you have a very, very long timeline, times like this should be a position for you, should be a time for you that you get to position and buy things lower, especially if what you're investing on may laman. especially if what you're investing on, as what I've mentioned, will be part of the recovery. Because here's the thing, I've seen 3 crashes in our economy. 1997 crash, I wasn't investing yet. I was young, but I was able to experience 2. The 2008 crash and what we saw last year. And it's not a matter of just being optimistic about it. It's a matter of history, statistics, and math. That every time a crash happens, it's followed by a very, very strong recovery. It's followed by unprecedented growth as well. Why? Because as you can see also right now, companies that got hit are starting to pivot. Companies that got hit are starting to get better and adapt to this new normal. So what I'm saying is this: for those of you who want exposure to equity funds, and at that time when I started out, I saw it firsthand how markets dropped during the 2008 recession, and I knew it that after this is all said and done, these companies that are built to last will continue to go higher. And if you look at it also, I started to invest using balanced funds. And what's interesting about balanced funds is this. It's a counterbalance to stocks, meaning you have bonds that give you the component that if there's so much volatility in the stock market, the bond market can give you this type of protection in a way that if things aren't so well, the bond market can give you stability. And I like that because looking at it, positions in bond markets would give you would buy government bonds which are guaranteed. And for those of you who are risk averse, it's still a good position to be in. So that's one of the things that I liked about it. And up until now, from 2007 to where we are right now, my position still stands at it's a very, very good way for you to be not just exposed in the market, but have companies that think about it this way. When you invest in equity funds, you get positioned in the largest banks, the largest power players, which kahit anong ipon natin ng pera, we cannot buy our own Meralco, we cannot buy our own telco. But because of funds, you get to have a piece of the Philippine economy. And it's time for Filipinos na makinabang naman sa sarili nating bansa. It's time for us also to make money off of it. Looking at the next slide is one of the reasons why I think it's so amazing is diversity. Meaning, I mentioned about the largest companies in the Philippines, but not just that. But because it's so spread across, just looking at the index alone, like what Zedric said a while ago, 30 stocks distributed from telcos, banks, supermarkets, conglomerates, which don't go down at the same time, which are totally unrelated to each other, which gives you exposure to the Philippine economy. What I'm saying is this: if you believe 5, 10, 15 years from now that after this pandemic is over, that the economy will be massively better than where we are right now, investing in VULs, investing in equity funds is you banking on the Philippine economy, is you banking on that when we're all back to normal, then when we all get to go out again. The Philippines is a consumption-driven economy where majority of people in the Philippines like to spend. Like what James said, Shopee, Lazada, as Filipinos spend, the economy will thrive, and our demographic just keeps growing and growing and growing and growing and growing. In the next slide, one of the reasons why I was so attracted to it, especially when I was starting out, and if you are new to the world of investing, I hope that you grasp this. When you invest in the stock market, you have to decide what stock do I need to buy? How many stocks do I need to buy? If I want to put in 1 million pesos or 500,000 pesos, how do I tranche it? Do I buy 20% first? Do I put 50%? And then later on, 6 months along the line, I have money. What stock do I buy, or do I hold, or do I sell? The value of equity funds is that you have fund managers to do it for you. I saw that as an advantage on my end, because they, at that point, I knew that they had experience more than what I had. So if you want exposure and you don't want the nitty-gritty, how many shares of Ayala should I buy? Is it Ayala Corp, Ayala Land, Ayala Energy, or should I buy a telco company? Should I buy a water company? What should I buy? How should I proportion it? If you don't want that headache and you just want exposure, then I really believe fund managers are there to do the selection for you. And they're there also so you can pick and select and time properly without the hassle. Because please remember this: in the world of investing, investments are supposed to work hard for you. Meaning, if you're glued to your screen every second of the day trying to watch your investment, then it's not an investment anymore. It's you being an employee to your own investment. And for those who want passive income, I really believe that equity funds via VULs will do a very, very good job. And number four, next slide, please. Um, I was dabbling a bit about it already, but when I was starting out, it allowed me to leverage time. It allowed me to leverage that, oh nga no, I get to have exposure to the stock market and the bond market, but in the same time, I get to start other businesses and I still get to be good at what I do. So here's the thing, as much as I like everyone to be stock traders, stock investors, have exposure to the stock market or start their own business, I really believe not everyone will be entrepreneurs, but a lot of us can have exposure to the largest businesses in the country. And now you're not just leveraging the largest businesses, but because you're investing in a fund, you're leveraging the expertise and the skills of those fund managers as well. So, next slide, please. My technique in all of this now, as I started to invest, and I hope that this gives you conviction in all of this, is the next slide will show that my goal when I invested was my retirement, and which is front and center to what all of you guys were clicking a while ago in the survey. When I started out, I was already planning for my retirement when I was in my early 20s, because and you guys who answered retirement are doing it right, eh? Because it's not a question whether you will stop working, it's only a question of when. And the sooner you prepare for it, the better. And what's interesting about that is you invest not because you want to make money, you invest because you want to hit a goal. And my goal was retirement. My goal was when I hit this age, and at that point, I was thinking 60 was the retirement kasi yun yung turo sa atin. Kailangan pag 60, okay ka na. But think about it. For those of you who are in your 30s or in your 40s, or at least those of you also who are in your 20s, if you start investing right now, or if you double down right now for retirement, say at 60, you have at least 20 to 40 good years of time that you get to invest. You have 20 to 40 years also that I was thinking that, paano yan? Stocks eh. Like what Zedric said a while ago, may volatility. There will be times na babagsak siya. But my mentality was, I'm investing in my 20s eh. If a crash happens 15 years from now, which is also likely that there will be another crash later on, hindi ko pa naman kailangan yung pera eh. I would have been in my 30s at that time eh. And knowing that hindi ko pa naman kailangan yung pera, hindi pa naman yun yung time ng retirement ko, if I had extra, it would have been a buying opportunity for me. And please remember, it could be retirement for me. For some of you who placed other goals, that's well and good. Please remember this. Whatever you earn from your investments, they are always a byproduct of how you structure your goals. Never, ever, ever chase returns first. Returns will always be a byproduct of how you plan, because that's the most important thing. You invest to meet a need. You invest to meet a goal, so that when markets drop, you don't get rattled, because your motivator for you investing is your plan, is your goal. And I'll tell you this. I mentioned a while ago that recessions will happen. There will be another recession. 8 years from now, 10 years from now, 12 years from now, 14 years from now, I don't know when. It's not a question, I don't know what will be the cause of it, but it will happen. And the sooner you prepare and have a strategy also when that happens, it will allow you to structure your investments well. In the next slide, aside from plotting a goal when you invest, my technique for conviction is always invest for the long term. And this may sound cliche, but it's real eh. There will be times that as you invest, 6 months, 1 year, it's not performing. 1.5 years, 2 years, it's not performing. It's even lower. But if you are looking at it from a long-term perspective, that's a reason for you to buy the dip. That's a reason for you to double down. That's a reason for you to put in. And I'm sharing this not from something I read off a book. I'm telling you that it works eh. There are certain investments that I started 2007 that on 2009, 2010, they were not working. But 2012, 2013, and once things started to improve, you would see the benefits of it. Please remember this. It's the boring things in life that will make you rich. It's not the sexy things. What you see around you, people always want, get rich quick, get rich quick. It's not like that. Eh. Sometimes it's when no one wants to invest, no one wants it, everyone's scared. That's the position for you to start allocating. That's the time for you to be able to come in. And people would ask me in 2008, ang galing mo naman, bakit ka nag-invest ng 2008? Paano mo nalaman? Here's the thing. I didn't know the market would go up in 2009. I didn't know it would rally to highs in 2010, 2011. I just knew that in the midst of uncertainty, recoveries will happen. And ladies and gentlemen, we are sitting in another area. We're not at the lowest anymore, but we are still at a point where there's still uncertainty. We're still not yet out of the woods. And I want you to picture this example when you're looking at the long term. Think about BGC. BGC, year 2000, sobrang mura ng lupa doon. But no one was buying because no one knew what it would be. Eh. Fast forward 2021, BGC is all primed up like Singapore, like a first world country, first world city. But here's the thing, the prices are higher. You have a choice. Eh. You can think long term, but you can invest while everything is not yet as nice, because when everything is not yet as nice, it's cheaper. Or you can wait before when things get better, when the pandemic is gone. But here's what I know. Prices won't be as low as what it is right now. Anyways, next slide, please. And you could use this opportunity. And every time I would see dips, especially for my funds, especially for equity funds, for balanced funds, it would be an opportunity for me to accumulate. Please remember, what's more important than the gains that you will get is the base that you put, how you accumulate your funds. People always want, anong investment yung magbibigay sa akin ng 100% return? Don't focus on that. Focus on gaano kadami yung nalagay mo. Why? Let me submit this idea to you. If you have an investment that earns 100% pero 10,000 lang linagay mo, earning 100% on that will just give you another 10,000 pesos. But what if from 20 or 30 or 40 years old, you start accumulating from your salary, from your bonuses, you become very, very intentional and you put in money. What's interesting about that is this. At certain points, even if your investment would dip, but because you started accumulating with a larger base, by the time you retire, that money that you started putting in your 20s and in your 30s would have been massive already. Now, next slide, please. What would give you conviction also is this. Please remember that every time you invest, you only invest your excess. And I just want to balance it out because sometimes after webinars like this, madami sa inyo, sige, lalagay ko na lahat ng ipon ko. Never put in money that you would need for today. Only put in money that is an excess of what you need. Yung hindi nyo gagamitin, yung hindi pan tuition fee ng anak nyo bukas, yung hindi nyo gagamitin 3 months from now. It should be something that you should put in and just forget about it. Because if it's something that you can forget, the volatilities that happen in 2021 won't matter. The volatility, the drops that you would see won't scare you. And my gauge, every time I would invest, let me give an example. For example, you want to invest, si James, feeling ko sobrang yaman yan. So, mag-invest yan ng 10 million pesos. Okay, so if you would think about 10 million pesos, always think about, what if this drops by 30%? Can I sleep soundly at night? If the answer is no, then you lower it. 5 million pesos, is this something that I can sleep soundly at night? If the answer is no, then you lower it again. You invest for the long term, but only invest something that if it goes to zero, okay lang kayo. You won't fight kung mag-asawa kayo, hindi ka awayin ng mother-in-law mo. It has to be an amount that you can live with in spite of the volatility. So, in the next slide, this is what insurance is what makes insurance so interesting. Having a VUL allowed me to have a hedge. But on the next slide, this is what makes it interesting. It gives me both a hedge of protection and also investments. And on the next slide, I've been investing for over 14 years now, and fast forward to where we are today, I would say that my exposure in equity funds was one of the best things that I've ever done, because it allowed me to not just see how it works, but it builds your acumen. It allows you to have experience, meaning the more you start investing, the more you get entrenched by it. You will realize that drops are normal. that the next time this happens, next time a drop will happen 7 years from now, hindi na kayo matatakot eh. Why? Kasi napagdaanan nyo eh. When you see that, oh nga no, after 2008, we recovered back again eh. That will give you the confidence that 8 or 10 years from now, when you look back, as markets drop again, I saw this happen in 2020, I already know what to do. And that's what I want to encourage you on. You double down and you spend a lot of time building your base right now. I'll just run through these slides, but these are a couple of things that I want to impart on you on the value also of VUL. Life insurance is not about predicting the future because it's about being responsible, because we can never know what will happen later on, but what we can do is to be faithful with what we have right now. So life insurance for me is about protecting my cash flow. Next slide, please. But also protection from being a burden, meaning if things don't go the way I want it, my life insurance can protect me, my VUL can protect me. Next slide, please. And what's so interesting about that is this: when you know that you have your bases covered, meaning you have a firm foundation, that you've already set aside money to hedge, that will allow you to go full throttle in your investments na hindi na kayo kakabahan. You can even invest in investments that people think are so risky, but because you've protected your bases that even if you can take riskier bets because you have a good foundation, hindi na siya nakakatakot. Next slide, please. Investing is about long-term capital appreciation. Next slide. And here's the thing. I just want to say this, that stocks, bonds, forex, property, business, insurance, you all need them. It's not a question which is the best investment. It's a question of which investment will complement your portfolio, because what the strength of one will also complement the weakness of the other. So people always say, ano ba magandang investment kasi doon ako maglalagay, all in ako doon. Don't do that. It's all about finding what investment will work the best for you. Next slide, please. So with that, what is VUL or variable unit life to me? Next slide. Number one, it's a hedge of protection in the prime years of my life. Next slide. It allows me to go all in on my investments and businesses because I know I've covered my base as well. Next slide. It gives me or my family cash flow should things not go the way I want it. Please do note that what's so unique about a VUL is it gives you offense, that it gives you an investment component, but it also gives you defense, that when things don't go your way, you're protected. Next slide. It can replace my active income sources if I could not work anymore. Next slide. And the investment component gives me a level of cash that I can use for my future goal. And for most of you, it's retirement. Next slide. So should you have life insurance? Should you get VUL? Next slide, please. So in my opinion, it's not a question whether you should get one, but it's a question of finding what fits you and what your goals are, because we all have goals and we need to find something that's a sweet spot to meet our needs and to meet our goals as well. Next slide, please. So you put money in life insurance to protect you, but you also have an investment component that can maximize what you already have. Next slide. So to close, I just want to show this picture. This is a tree in Jerusalem that while we were walking, the tour guide pointed that this olive tree has been there for over 2,000 years already. So while a lot of people were shocked, whoa, this is 2,000 years, a financial nugget of information came into my mind, which was this. I could never count and I could never guess if there were millions or hundreds of thousands of olive fruits that came out from the tree. I will never know. I will never know how much has come out from that. But there's one thing that I do know. All of the fruits that came out from that started with one seed that was planted in the ground, one seed that instead of being consumed or wasted, it was something that was put in. And what I want to submit to you is this. Your future is in what's in your hand right now. Don't wait for things to get better. Put it in the ground, invest it, and wait. Because the biggest trees take time. This is not get rich quick, but this is get rich right. This is not you putting it in the ground and hoping that aani na kayo bukas. Because once you put it in, and once it starts to get bigger, you will never know how many generations of Filipinos in your family will be better, because right smack in the middle of 2021, you started thinking about your future. You started to invest. You started to plant when there was uncertainty, when everyone did not want to do it. And it's high time now that all 1,000 of us, in the prime years of our lives, put in and double down, because there will come a point in time when we're older, we don't get to do this anymore. Eh. And if there's one thing I know about investing, it's all about time. Don't waste the time that you have. Keep on putting it on the ground and let your money work hard for you. So thank you so much, Manulife, for inviting me. I hope you guys learned a lot from this, and God bless you all.
Wow, thank you very much, Marvin, for all those important tips. I'm sorry, I'm getting a little feedback here myself. Just give me a second. And sorry about that. Seem to get my own feedback here. Okay. Let's lower this a little bit. All right, Marvin, sorry about that. I got a little bit feedback here on my end, but that was just such a fascinating discussion. Am I okay, Martin? Do I have audio there? Okay, sorry about that. And, you know, speaking of investments, you went through a whole plethora of investments for us. And I just wanted to point out that while I'm not a financial advisor myself, I can tell you this, that the investment you make right now will pay off in the end of this, because we're giving away 5,000 pesos worth of Sodexo GCs. Also, we'll be giving away some tickets to the virtual concert of Sarah Geronimo, who's also a Manulife policy owner since 2015. More of that is coming up, of course, later on. But in the meantime, I just think that we've just got so much that we have to get through here. And getting a life insurance with investment plan should not be perceived as a burden, but rather as a necessity. Great points made by our speakers, both for your financial growth and preparation for your retirement, and also safeguarding your family from risks, therefore ensuring peace of mind. Now, I know there's so much to absorb, but just try to, because this is solid gold what we're doing here. And before we move on to our next segment, I would just like you all to pause for a moment and just watch this video about one of Manulife's best-selling VUL products.
You deserve the best life. You work hard. You know the formula for success. Your options are wide, but few make the cut. We can help you make the most out of life, because you deserve the privilege that comes with building an elite life. Introducing Manulife Affluence Max Elite. This one-time investment in life insurance plan provides you with a startup bonus that would optimize your funds on the onset, so you can enjoy rewards now and in the future. Experience the Manulife Affluence Max Elite Advantage. Let's say you put in a one-time investment of 1 million pesos. Manulife will give you 1% of that as a startup bonus. This increases your investment by 10,000 pesos. Assuming that the funds grow by 8%, your investment can grow to almost 5 million pesos. Get a loyalty bonus. If you stay invested, you may have the chance to get a loyalty bonus on the 10th, 15th, and on the 20th year. Enjoy hassle-free application through a guaranteed issue offer. This means that there would be no need for medical examinations if certain conditions are met. Get a boost on your investment by making additional investments anytime. Enjoy peace of mind with life insurance coverage. Invest through Manulife Affluence Max Elite. Get an early reward and look forward to more.
And if you want to know more about this product and you have an existing financial advisor, please schedule a call or expect a message from them right after this webinar. And for those who already have a VUL plan with Manulife, well, you can check your fund performance through Manulife Online. Manulife Online lets you view and manage your insurance policies wherever you are and whenever you need to. Pardon me, we lost this a second. Whenever you need to. For those of you who are already with the Manulife policy, try doing this through your Manulife online policy, because it is a very, very good way to get checking into your account. Manulife Online lets you view and it lets you manage your insurance policies wherever you are and whenever you need to, which is very, very important in, of course, managing all your money. But we've also got some very exciting things. We've also got a QR code here. Just scan that QR code, register online to Manulife Online. And here's the part I was talking about a little earlier about the investment. We've got 1,000 pesos e-gift certificates that are going to be given out as well. And you may access your Manulife account by doing that. And we will be doing 5 winners, or picking 5 winners of 1,000 pesos EGCs from today's webinar's attendees. Now, speaking of policy owners, we're also giving away 2 tickets for the virtual concert of brand ambassador and Manulife policyholder since 2015, Sarah Geronimo. This will be on March 27, and winners of concert tickets will receive an email from a Manulife representative straight after this webinar. And now, for those without a financial advisor yet, well, you may reach out to us via the contact details that are flashed on your screen right now. Trust me, we'll make it worth your while if you do that. So keep those numbers handy, or all those digits and the email address, and send us a bit of a message on manulife.com.ph. Right? Or you can visit all of the Manulife branches nationwide. Of course, first, your health and safety is our priority. So just make sure it's safe to do so before you do that. Otherwise, you can go down the virtual avenue, and that's a whole lot safer. Now, let me call back our speakers, Zed Matubis and Marvin Germo, for our panel discussion. Gentlemen, welcome back.
Hi again.
My brain's exploding. I don't know about you. If this is just another day in the office for you, I don't even know where to store all the information you've given us. But we're seeing a lot of questions from our viewers. But before we go to that, let's have a quick panel interview just to make sense of it and maybe put some in layman's terms. I know our audience are very engaged and also very informed, but let's see if we can break it down. My first question is for Zed. Zed, earlier in our poll, we asked our viewers what they're currently invested in, and a lot of people answered some pretty great things, and insurance was one of them. I want to know what you think about this.
First of all, James, I'm quite happy that Bank TD wasn't the number one answer. A few years ago, that would have been the case. But seeing the results, and particularly because insurance is the number one answer, I'm very happy, because it just goes to show you that how much we have improved as an investing public in terms of knowledge and the ability or the decision to buy more insurance, which is very important for securing your future.
Thanks, Zed. Now, Marvin, how popular is VUL compared to other investment vehicles? I mean, there's an impression that variable universal life plan is not that popular compared to other financial tools despite its advantages. What can you say about that, or what advice can you give to those who are still hesitant to invest in VUL because of the commitment needed to pay premiums within a certain number of years? You're on mute. That's a 2020-2021 saying of the year. You're on mute. It's okay. Well,
Yeah,
I think
there you go. Am I back? Okay, there. It's popular to me in a way that it was one of the first investments that I even invested into. I went into that way before stock market, way before cryptocurrency. So it's a very, very good, in my opinion, it's a very, very good way also to get your feet wet, especially if you have a financial advisor who's hand holding you in the process, that when markets are down, a financial advisor can also give you sound advice on what's happening. And I think that's the added bonus of it also, that it's not just you going through the financial journey by yourself. You have people who could give you also sound strategies on what you're supposed to do. So to piggyback on that also, I believe that it forms a part of your portfolio that it will complement other portions. That's what I've mentioned. There are investments for growth, there are investments for hedging, there are investments for cash flow, and a VUL can give you growth and hedging at the same time. So something like that.
Thank you very much. And now our next question is for Zed. Do you think Filipinos in general lack confidence in investing? Are most risk averse, or is it just more a lack of knowledge and education about various investment options?
James, I believe Filipinos in general are starting to get more confidence and starting to get more knowledge about investing. We are still not where we want to be ideally. A lot of data will probably show us that the Philippines is behind our neighbors when it comes to having insurance or investments for retirement. But I think more and more Filipinos are thinking about these things more. So it is very important, for institutions like Manulife and their advisors to be ready to support this growing demand for knowledge. And that also includes Marvin here, who's been very helpful with his books and his webinars.
Very, very, very helpful indeed. Okay, so perhaps this next one, either could take, but since VUL products rely on market movement, is it safe to get one in times of a pandemic like right now? Marvin?
It always goes back to what your timeline is. Number one, if you have the money and you don't need it and your cash flow is not interrupted and your timeline is very, very long, I would say that in times of uncertainty, this allows you to accumulate right now when prices are low. The problem is kasi when there's no pandemic, people would always say that the market is too high, everything's so expensive, I can't buy anything. Well, here's the thing. Right now, we don't know when things will recover, but this is what I do know. We are much, much lower than where we were before. So if you want to position and wait for the recovery, then I really believe that this is a time for you to get prices lower, especially if your timeline is very, very long as well.
Great. Awesome stuff. All right. So many questions here. I'm looking at all these screens because so many people are engaged and the questions are just through the roof. Here's another one. When do you experience ROI with VUL? I mean, if my money is in there for 20 years, will I be sure that my money would have earned? Is it fair to say that? Marvin, perhaps you can continue.
Okay. Here's how you segment it. Similar to what I mentioned during the talk, that your goal should not be to look at the ROI first. Your goal is to match it with whatever need you would have, because this is what I believe. Gains and returns are just a byproduct of what your strategy is. So let me put context to that. If your investment horizon is 20 years, as what you've mentioned there, you look at what amount of money am I targeting for this 20-year horizon? Is it 10 million? Is it 15 million? Is it 20 million? And the technique there is this: the closer you are to that amount that you're trying to get already, you start to shift it already to investments that are less volatile, because as what we talked about earlier, volatility happens. It's normal. It's part of the game. And you want volatility at the early parts of your investing cycle so that you get to buy things cheaper. But as you get older, the technique there is just to shift it into other products that are less volatile, so that should a crash happen later on, you won't be as hit and you would still come out earning money. Especially if, I'll say, I forgot to mention this, during crashes, you just keep on accumulating and keep on buying when the market is cheaper. And when the market is expensive, that's when you can start saving a bit more, as when it gets cheaper, you add again. So that when the 20-year time horizon is up, you will be in a much, much better position.
Okay, just a quick follow-up, Marvin, about the VUL. Companies offer top-ups, right? What does that mean, and is it something that you advise?
Okay, that's very interesting, because that was my strategy when I was starting out. So normally when you get a plan, there's a fixed amount that you need to put in either on a quarterly basis or on a yearly basis. A top-up is basically you putting something above and beyond that. So for example, you've dedicated to put 100,000 per year. A top-up is something that you would put in excess of that. And I challenge everyone, no? When you have your bonuses, when you have your 13th month pay, you treat that as a bonus, and that's what you put in as your top up. Because every time you top up, it allows you to buy more shares. And that's what we've been talking about. It's all about accumulating, and it's all about building a larger base. So I've been doing it. I've been living it. It works. If you have extra, your bonus, top it up.
Good advice right there. Thank you very much, Zed and Marvin, for your very comprehensive and also very insightful answers. Now, guys, it's still not too late to hit the Q&A box, despite all the questions we're getting, we want to encourage you to ask yours and get your questions answered by our speakers. Right now, we're getting a lot of great questions from the audience, and I'm also excited to hear our guests answer all these. But before that, make sure to stay tuned until the end of the webinar, because Manulife Philippines is giving away those gift certificates I keep mentioning worth 5,000 pesos. So watch out for that. Now, before we proceed to the Q&A, we would like to, of course, first acknowledge the presence of our friends who have attended here from the media. So a big shout out to all of our guests out there from the Manila Standard. We have from Business World Spark Up. We have Thea C. And for all of those who are tuned in, thank you so much. We're really, really grateful that you're joining us. It makes this whole webinar just worthwhile. Now, we're ready to bring back Zed and Marvin on screen for our Q&A segment. Gentlemen, you're in the hot seat. I hope you're all ready, because this is just going to fly. We're just going to fly live with this. We're going to take questions from the audience. I have a ton of questions here from everywhere, right? So the first question is coming from, I can't read the name, but the question is from Marvin. Here we go. Why is it crucial to diversify investments, right? There's a follow-up. For an average person where investing seems complicated, how to start?
Number one, diversification also is dependent on how big your cash position is or how big your portfolio is. But similar to what we talked about in the webinar, that a VUL, an equity fund, already gives you bits and pieces of diversification already. So one way for you to determine if you're ready to diversify into another asset class is, for example, your exposure to this particular asset is too big already, and you're not so comfortable to have that amount of money just, for example, in real estate. So you might think that I may need to diversify already further so that I'm not purely exposed to this particular asset class. So you could look at your comfort level. You could look at your exposure, that am I being too aggressive in this particular investment, that if this investment collapses and if everything is there, it will cripple my portfolio. So that's how you can look at it. It's a case-to-case basis. People would put numbers to it, but my suggestion is just to try to play it on your comfort level. But generally speaking, VUL is something that's already diversified, especially if you have something spread across bonds and you have something spread across the 30 plus companies that are in our index, the 30 companies in our index.
Thank you, Marvin. Zed, we have a question for you, once again from our media friends. And this question says, based on the market update, what would you recommend where to invest our funds? It's a pretty broad question, but take a good stab at it.
Well, yeah, as Marvin also mentioned, and also as I mentioned also, we are fairly positive in the equities market right now. Again, it will all depend on your conversation with your financial advisor. It will depend on your ability to take risks, your ability to your investment horizon, your financial goals. But again, generally speaking, we like what we see that can happen in the long term in the Philippine stock market.
Okay, great. And let's fly through some more of these because they're just pouring in, I tell you. We've asked already about why it's crucial to diversify. Let's go straight into you, Sir Marvin. You mentioned that you first invested in life insurance, VUL. May we know how it's going after 14 years? I know you've kind of answered it, but perhaps a refresher.
Yep, it's good because what you invested early on allows you to build a base already. So in times that the markets were lower, those investments that I placed in were the ones that are pulling my gains also for today. So yeah, I'm quite satisfied with it.
Great. I love the analogy you used, or little nugget, financial nugget you got from the tree, because I think that spells out a lot. I'm sure that tree, like you said, you mentioned about the fruit and how much fruit, and that started from one seed. But I'm sure there were times when that tree was down and not producing fruit. I'm sure there were times when that tree didn't look as healthy as it was today. But if you're spreading it out, I think that's the message I'm getting from both of you. It's understanding your goals, what you want to do with it, and then you ride out those times. Because if you're so obsessed with the little dips and drops and peaks and valleys, I like the way you put it too. You become an employee again.
Yeah.
And that's the whole point of investing, is to liberate ourselves from that. Okay, more questions here. Piling through. Bear with me because, like I said, I've got like 3 or 4 screens open because that's what it takes now to address this very engaged crowd that we've got here. Okay, so running through a few more. Where do we have these ones here? These are just, I'm so excited because now is also a time that I've just started getting into investments myself. So I'm, on a selfish part, absorbing a lot of the information for myself. And so a lot of these questions here, let me just get this one over here. Okay. Tell, if you could see my screens, you'd understand why I'm going through all of this. There's literally thousands. We got 1,500 people tuned in, and everyone's trying to ask a question at the same time, and I'm dying to get all of them. So just recently started earning and would like to invest some of my savings. It's not a lot, but I will be able to invest in VUL for just about $3,000 a month. Is that enough? Is that okay? Marvin?
I mentioned earlier that investing is about building a base, but so I assume that you just started working, meaning you're in your early 20s. You have something that a lot of people don't have. You may have a smaller salary, but you have time. Meaning, putting 3,000 and increasing it every time you earn more, you get a promotion, you transfer, you get a bonus, will go a very, very long way. So if you'll ask me, between you, a 20-year-old who's just starting putting in 3,000 pesos, then a 55-year-old putting a larger amount of money, dadating yung point when you reach 55 and 60 years old also, you would have put in more money because of the amount of time that you have. So don't despise small beginnings. Start with what you have, because investing is also about the discipline. It's never about how big it is at the start, but it's about you know James, what the biggest problem of Filipinos are when they invest is when they invest, pag kumita na tinatanggal nila. But the discipline there is to put in money, pag kumita, put it back in, let it compound, and then if you have extra, you just keep on piling it until it becomes something that becomes so big that it's so beneficial for you already. So there.
Okay. All right. I hope I have that problem one day. I pray for problems. I was gonna say when you invested, that's why the rich get richer, because James is investing and. All right. I'm blushing now. Okay. Zed, question for you. Again, pretty bold and pretty general, but fearless prediction. When do you think the market will fully recover?
Yeah, our view, as mentioned earlier, is that markets are poised for a recovery in 2021 on the back of expectations of the reopening of the economy and optimism with the vaccine. As to the question when the PSEI will actually reach the levels that we saw January 2020, for example, that is still uncertain. This will really depend on a lot of factors, catalysts, and risks that we mentioned earlier.
All right, that's good. That's good. Great way to answer it. Another question here. This one's for Marvin. I believe if I already have a traditional life insurance product for my protection needs and I want to invest, would it still be worth putting in my money in an investment-linked insurance plan?
That's a very, very good question, but that's also something that's very personal. I can share things that I did. I have both because there are certain merits for a traditional life insurance, and there are certain merits also for a variable unit-linked insurance. So if you are the type of person that you want that growth and whatever is in your fund gets protected because it's part of an insurance, and then you also want that investment to be protected, will help your estate to give you a certain level of protection later on, then a VUL will work very, very well for you. So my suggestion is, whoever invited you here, talk to them so that they can drill down what are your specific needs, because it will always go back to ano talaga yung kailangan mo, and ito yung solution for that. So if you're asking me, I have both because they complement my portfolio. So better drill down also and look at how much you need right now and what are the types of VULs that will also work hard for you right now.
Okay, great stuff. Zed, question for you. Does no guarantee in returns mean that there is a chance that my investment might be depleted or reach zero value?
James, that's a good question. In the realm of the theoretical, obviously that can happen. But within the limits of reality, the chances of that happening is very close to zero because of three things. One, companies and securities that we have or our fund managers have historically invested in have low to zero bankruptcy or default rates. Number two, when you invest in a pooled fund like a VUL, you, like what Marvin mentioned earlier, you immediately get diversified, 20 to 30 securities at a time when you just invest in one product. So technically, you need all of these 20 to 30 companies to go bankrupt at the same time, which is again very, very unlikely. And then third, and I think this is the most important reason, is that the fund manager uses fundamental investment process. Having an echo. Okay, I'm having an echo. So sorry about that. So and then the third reason is active fund management. Will actually means that the fund manager will have the ability to identify bankruptcies or defaults early on.
Okay, we did get a little bit of feedback there, but we did understand. Now I'm getting it. Right. Well, you know what? The information's so valuable, we have to say it twice. Now, this question here, is it true? That life insurance proceeds is tax-free? How can I take advantage of this? I'm working with the echo here. Marvin.
Okay. Oh yeah. Sorry, it's a bit delayed. Yeah. What's nice about that is the insurance component. And you add that to your fund. If something happens to you, especially if it's irrevocable, those are mainly tax free already, and that's an advantage, especially if you are in the latter years of your life already. When something happens, your family would need to pay estate taxes. That insurance component that's tax free is something that they can get readily and they can use already for whatever expenses or proceeds that they would need to use later on. So that's why I mentioned at the start that there are certain advantages for some investments that give you a hedge. They may not be something that's super sexy that will give you growth, but in times that you need certain levels of protection, like protection from taxes as well, this is a very, very good way for you to get tax benefits, or at least have an investment that's tax free.
All right. Let's see if there are more questions. Still getting it. I'll try doing something on my end. Just bear a second. I don't know. Check. It seems to still be there, but why don't we move on anyway? There's still a lot to get through, so if we're still getting this, we're trying to fix it. It's just inspiring to be in an event with such engaged viewers. So I'd like to take this opportunity to thank once again to those who have sent in their questions. I'm sure you've got some great insights from our experts, just like I did over here. And I'm sure everybody tuned in because we've been getting a lot of messages as well. Zed, Marvin, I'll leave you both to give your final words for our viewers before we end our Q&A sessions. Perhaps you can start with Zed.
Thanks, James. Marvin, I'll speak first. My final message to the audience is to invest long term. Diversify. Take advantage of the opportunities available in 2021. And finally, please consider Manulife as your partner in achieving your financial goals. Thank you.
Thank you very much, Zed. We're going to try one more thing here. Maybe this is before I bring Marvin up.
Okay, am I back? Okay. A lot of people regarded 2020 as a year that was so bad, and what I want to submit to all of you is use 2021 as a year for you to bounce back, because I really believe that there's so much opportunity right here, right now, in the midst of the uncertainty. And let's not wait for things to get better, as what I've mentioned at the start, but do what you can, do your best with the resources that you have, save and invest, because everything that you need to prosper is already right within you. It's either you work hard for it, and as you start to work hard, don't spend it, just save it and invest it, because at the end of the day, time is one of your greatest assets, and use what you can right now to put it in the ground to make your money work hard for you. And I really do hope that 2021, as you look back at this date, this was the year, this was your turning point, that you were able to push forward to whatever dreams that you have in getting financial freedom. So thank you so much also, Manulife, for having me. James, thank you.
Thank you too very much, Zed and Martin. Just before we announce the winner of the raffle prize, let me call Vanessa to show the result of the last poll question. Hi, Vanessa. Can you hear me?
Hi, James. Yes, and the echo is so cute. Earlier, we asked our audience this question: what is your investment appetite this 2021? And the choices are A, confident; B, not too confident, I need advice from an expert. So good to know that majority of you here are confident, and actually it's 52%. I hope most of us here will be better, smarter investors after hearing our speakers. Remember, VUL can help us not only to protect our hard-earned money, but also to protect our families from life's uncertainties as well. Now, for those who are not confident, don't worry. It's not too late to consult a financial expert to help you assess market condition, your needs, and the right product that address your needs and your budget. Now, we are here to be more confident when it comes to investing. Now, I'm sure a lot of us here became better, smarter investors after hearing our speakers earlier talk about the market outlook for 2021 and how VUL can actually help us not only to protect our families, but also life's uncertainties, but also our hard-earned money. Now, thank you everyone for participating in our poll. Back to you, James.
Okay, thank you very much, Vanessa. And now it's time to show our winner for this afternoon's final raffle draw. Woohoo! How exciting is this? I've been press releasing this for a long time, so I'm super excited about 5,000 pesos worth of Sodexo, and that goes to Johan Musico. That's Musico to your ears, I'm sure. This is going to be great. This is as good as cash. I tell you, you're going to be spending on stuff you're really going to need. So a representative from the Manulife team will reach out to you on how to claim your prize, Johan. So just hang tight, sit tight for that. And we'd now like to thank everyone who joined us this afternoon for taking the time, and also, more importantly, for actively participating during our Q&A segment. It was just incredible. I mean, I wish we could have gotten through all your questions. It was so engaging, and I was just very impressed by all of the level of questions that were coming in. We hope that this webinar inspired you to make better decisions in investing in insurance so you can live easier today and live every day better, even through retirement. And that wraps up this afternoon's Financial Wellness Webinar. This has been your host, ladies and gentlemen. My name is James Deakin. Watch out for future webinars of Manulife Philippines together through their Facebook page. Keep an eye out for that. There it is on your screen. I will just leave you now with a very quick post-event survey to help us know how you found today's webinar. All you have to do is simply scan the QR code flashed on your screen right now, and it'll lead you to the rest. Together with Manulife, we can live every day better and with the right life, insurance, and investment plan. Thank you very much once again. Maraming salamat po. Stay safe, everyone. See you next time.
You deserve the best life. You work hard. You know the formula for success. Your options are wide, but few make the cut. We can help you make the most out of life. Because you deserve the privilege that comes with building an elite life. Introducing Manulife Affluence Max Elite. This one-time investment in life insurance plan provides you with a startup bonus that would optimize your funds on the onset, so you can enjoy rewards now and in the future. Experience the Manulife Affluence Max Elite Advantage. Let's say you put in a one-time investment of 1 million pesos. Manulife will give you 1% of that as a startup bonus. This increases your investment by 10,000 pesos. Assuming that the funds grow by 8%, your investment can grow to almost 5 million pesos. Get a loyalty bonus. If you stay invested, you may have the chance to get a loyalty bonus on the 10th, 15th, and on the 20th year. Enjoy hassle-free application through a guaranteed issue offer. This means that there would be no need for medical examinations if certain conditions are met. Get a boost on your investment by making additional investments anytime. Enjoy peace of mind with life insurance coverage. Invest through Manulife Affluence Max Elite. Get an early reward and look forward to more.
Sabi ko nun, ready for you 2020. What a lie. May pa-claiming it pang nalalaman. Wala namang ka-claim-claim sa taong to.
Papunta kaming Tagaytay. We're gonna visit
Tagaytay ba?
Tagaytay.
Tindi ng pasabog nung January. Buti sana kung fireworks lang. Kaso, dumating ang unprecedented times. Lahat ng pwedeng mangyari, nangyari. Siya nga pala, Lola Nora ko. Siya lang ata ready.
Basta pang 2 years na to, ha?
Anyway, yun na nga. Nakulong sa bahay, nakaubusan ng bilihin. Pag lumabas, nakakapraning. Iniwalayan nung gusto mo makasama sana habang buhay. 7 years yun, Zoe!
Mabuhay ang bagong laya!
Naghanap ng kaadikan para di mabaliw. Wala halaman.
2999! 3,000! Oh, Miguel! Catch up with me! Di ba 25 ka lang?
At mga balik-alindog na program.
Happy birthday to me.
Nag-birthday mag-isa. Kakalungkot din pala.
Happy birthday, Miguel!
Kung ano-ano ang sinubukan.
Ay, masyado matangos. Oh, better.
Kung ano-ano pa mga napagtripan. Kung ano-ano ang binili dyan. Di makapagpagupit, tinry na hindi mag-ahit, bumagyo, bumaha, ang daming nangyari.
Wow! Diba? Oh, galing ano?
Pero magbago na ang lahat. Huwag lang si Lola Nora. Last year sucked, but she was there to keep my spirits up. For that, thankful ako.
Hi, La.
Ano, Miguel? Ready ka na for 2021?